So, Katie, what are your expectations this year in terms of mortgage rates? What do you guys see happening?
You know what? I feel like this is all we've been talking about for the last couple of months anyways, but
No kidding.
what a ride. Like, I honestly have never, I've been with RBC for 23 years. I've never seen so many rate increases in such a short period of time. So, you know, it's no wonder that it's the topic of conversation for everyone right now.
In 23 years.
Yeah,
That's crazy.
It's been crazy, and just trying to keep on top of it and field all the calls that come in every time it happens. You know, and the media definitely, you know, shoves it in everybody's face, and you know, it's a good thing. It's good that people are aware of what's happening, and you know, they're able to kind of see what the projections are from the government. But I feel like there's a lot of scaring going on too, so it's definitely making people nervous. I think we've seen the worst of it though. Like, I don't think that...
Do you think so?
Yeah, I don't think that we'll see too many more. There will be a couple of additional increases, but what I typically use to try and gauge where I think the rates will be is our builder pricing. So, you know, we'll talk about that, but it is a good way for me to kind of get an idea of what RBC's forecasting down the road. Because if we can hold a cap rate on a new construction build, you know, for 3 years, and that 3-year rate is capped at 5.25, then that tells me that's what the bank thinks the rates will look like in 3 years. So, you know, we're at just over 4% now. If in 3 years the rates are 5, that's not bad.
Yeah.
Really isn't. I mean, still relatively low in the grand scheme of things, I guess, right? You were mentioning before the show how your first interest rate was what, 9%?
9%, you know,
Wow.
and that was in like late 2002, early 2003, and that was my staff rate.
Yeah.
So like, big discount, you know? And I just think that we've been so low for so long. This is really just, it's shocking to a lot of people.
I feel like our generation, it's not that we're that young, but I feel like our generation doesn't fully understand what a larger rate is, because we haven't been around long enough to see it.
My highest has only been 3.45. That's the highest my rate's ever been that I've had.
Right.
But I was always variable, so.
Yeah.
But still.
Well, and there's always that too, right? Back and forth. You know, I get that question constantly. Do I go variable? Do I stay variable? Should I? When do we lock in? When's the right time? There's no right answer. I think honestly what it comes down to is risk tolerance. It's the same as when you're putting together an investment portfolio. Do you want to be in a GIC or you want to be in mutual funds? What's your risk tolerance? And how much time do you have to pay attention to what's going on? Some people don't pay attention to any of this, and they don't want to.
Right.
You need to be in a fixed
It's like
rate
stocks,
then.
whether you want to be right on top of it or not.
You want to be in a stock or you want to be in a GIC?
Yeah.
GIC, you lock it and forget it, right?
That's so true, because I know a lot of people, because we're in the industry, so we're always talking about rates. We're always talking about housing prices and all that. But the average person that bought a home, raising a family that has no intentions of moving or anything, they're not even thinking of it, right? Like, they're not paying attention. So that's where, you know, that variable is, okay, I know what my payment is every month, and I can just kind of, you know, set it and forget it,
Yeah.
So like, how does renewing your mortgage work if the rates are higher when you first locked it in?
So on a renewal, if you are going back to your same lender and your mortgage is up for renewal, you're essentially just picking your new term at that time. And at that time, you have the opportunity to re-extend your amortization if you want to. So let's say you're coming out of an interest rate of 2.89%, and now the rates are 4%. Well, this is obviously going to impact your mortgage payment because you're trying to stay on that amortization schedule that you set up in the beginning. But if that payment's too high, you have the option to stretch that amortization back. And in most cases, you can go back to 30 years. So is that ideal if your goal is to pay your home off? No. But if it's a cash flow issue, you know, things happen over 5 years. You might buy a house, come up for renewal 5 years later. Well, now maybe somebody's on maternity leave, or maybe somebody's had a job change. The cash flow just isn't there to support it. So you can re-extend the amortization. Lower those payments back down.
Would you typically recommend starting at a 25-year term then? So you have that leeway?
Well, you would always have that leeway, whether you started or not. So if you came and took a 20-year amortization when you bought your house because life was the way it was at that time, and then you come up for renewal in 5 years and money's tight, you still have the option to go back to 30 years.
Okay.
Okay, so it doesn't mean you have to take it up front. 30 years is only available if you're purchasing your home with 20% down or more, and if you're purchasing with less, it's 25 years maximum.
Yeah, gotcha.
Yeah.
And then talking about closing on a home, I know that right now a lot of people have pre-approvals in place from when the rates were lower. What kind of window do those pre-approvals last? And then do you have to purchase in that pre-approval time or close in that pre-approval time? Like, what are the terms around that?
That's a really good question, and we get asked that all the time. So when you lock in your rate and you have your pre-approval in place with your lender, typically you're locked in for 120 days. So you have 4 months to secure a property and close to get that interest rate. So no, you cannot have an accepted offer that's outside of that commitment period. You would be reset to the current rates.
Yeah,
you have to close within that 120-day period.
Yeah, let's really drive that home. You have to have it all said and done, search, close, all of it within your 4 months to keep that rate.
Key in hand, take possession. So if you have a pre-approval sitting there right now and you've got 60 days left on it before it's expiring, if you can, it would be in your best interest to secure something and try and close on it quickly. Otherwise, you might find, your rate's almost doubling when we recommit you.
Wow. Geez, and you know what? That's I guess we're not starting to see that now, because I guess end of April would be the cutoff for anybody kind of early January. I guess end of May, right?
That's right.
Would be that cutoff.
Yeah.
So.
Yeah,
Awesome.
we're really up until probably end of May, beginning of June, and then we'll see everyone kind of in the higher interest rate.
Taking